Today is Friday, August the 2nd, and all I could say is that it could have been worse. We started off the McClellan oscillator midway through oversold momentum, and we're going to hit this line when it's populated with its data overnight, and we get the latest McClellan oscillator because decliners led advancers by a factor of more than about 2.5 to 1, 65% to 30%. So that's 2 to 1. The Dow just started down and then slowly started creeping its way back. I don't think it was on any particular news other than seeing Trump take a step back on some other things, including his pick for the new spy chief. It won't be Radcliffe. That happened later on in the afternoon, but there was just other things that happened in the day that are leading people to believe that he won't put on the tariffs September the 1st, or this is going to be the incentive that the Fed gives them some free money. And I think we're going to see when we look at the S&P that we've got some important indicators that we hit a possible bounce spot today. So the McClellan oscillator is going to be in the oversold region. It's only gone below that 1, 2, 3, 4 times and then popped up in the last year. But there have been 2 occasions where it went lower and stayed lower for longer. So we're going to have to keep an eye on that. I don't think we're going to have a repeat of last fall quite yet. So I'm looking for a little bit of a relief trade on Monday. And this is why the S&P 500 had 2 important indicators that I just tweeted. One, let's get rid of this box right now and just concentrate on those indicators. Sorry, I got rid of my cloud. We got support on the 50 SMA and resistance on the 50 EMA. So both of those were in play, but the winner was that the Chiku span got a bounce off this candle, and by staying above these candles, that's a major accomplishment. Getting below those candles would have provided all of this area for more downside for the Chiku span to go and try to seek either the cloud or these trailing averages. And we've shown you enough examples of how these trailing averages 26 days back play an important part of supporting price action 26 days forward, or current pricing action. So that is very important. Apple had an equally miserable day. Let's bring in the cloud here. And it did get support almost off of its 50 EMA. We can take this gap out of here. That is definitely a thing of the past. So we finished right in the middle of how high we could have closed or how low we could have closed. An indecisive day. And if you look at the 15-minute for Apple, the worst happened at about 11 o'clock in the morning, and then it just started moving up. So many sites are calling Apple a buy at this price. I've got my 200 shares is all I have. I decided that I would buy those the day after the Fed announcement when the market bounced back, but it was unfortunately the day before Trump made his famous negotiation threat. This is how the man negotiates, the great negotiator. Let's move on. Anyways, I think that Apple might see better days ahead. Caterpillar down 225. This is obviously a very China trade sensitive stock, but it's also an interest sensitive stock and an infrastructure sensitive stock. Now that the budget has been passed by the Senate and by the House, Trump needs some good news, and he's not going to get it from China. So he needs an infrastructure plan, and the Democrats want to give him one of those. That could help Caterpillar. So I am not a fan of a big bounce back for Caterpillar. I just want to claw back some money. So I sold some 125 and 127 calls. And I'll be happy to get back a little bit of money in Caterpillar and then wait and see where it goes down the line. GDX, this is the, something appears missing in this daily here. So let's just clear local data. There we go. So GDX did not hold its breakout of the flag. I posted when it was starting its breakouts. We would have waited to see if we had a confirmed breakout. If we were swing traders, we would have waited for it to finish outside of this flag and then have another day above this flag. But once it had gone above this point here, we would have been a buyer. So if we had ended up in this area here and then the next day we popped up over that area, that would have been the sign for us to buy GDX as a bit of security on an opposite trade for where the market might be going. So the fact that it didn't pop up also bodes well, possibly for the marketplace. T, our little 6% dividend stock, that's why I like it. After its earnings, just continues to do nicely. A little bit of a 3-day pullback here. We had this not quite an inverse hammer. I forget what you call that. Not a gravestone doji either. Maybe it's a gravestone doji, but anyways, it signaled a bit of a reverse possibility, which we had, and then we dropped back, and now we've had a pullback, a nice little bit of support. So T continues to be something that I just hold on to because it's like a 6% bond. It's not a bond. It's like a 6% dividend stock is all that it is. Whirlpool, we have 2 trend lines going, remember? Now we are down below our second trend line, but we did see something important here. We saw buyers hanging in just before price went down to the Chiku span, down to the top of the cloud, and they started buying back. But look where we closed. This is really important. Look where we closed. The Chiku span on the top of the cloud. You got to love that indicator. This tells you that Whirlpool gets its support almost from the 200. We closed a little bit below the 200, but that's close enough because the Chiku span on the cloud was more important as a place for stopping the day to traders than was the 200. I think we are going to see an upside for Whirlpool. WDC down $1.12. The euphoria from its earnings sort of getting sucked back and very low volume. Let's look at volume for the markets. We looked at the advancers and decliners, but we had a full relative volume day for the Dow, the NASDAQ, and the S&P 500. So we had some trading that is representative of what big traders are actually thinking. And towards the end of the day, they did start getting a little bit happier with the market, although there was some selling off towards the end. Maybe that was the imbalance. Not going to get into imbalance right now. U.S. Bank, that banking stock has had some pullback, and that's because let me just tell him I'm available. Yes. And that's because the interest rates are pulled down, so the banks are getting hurt by that a little bit. So overall, it was not a great week for me. I traded for a bit of a loss, and of course, it was a pretty bad week for overall. My portfolio ended up down maybe a percent and a half. But I was able to add to my cash position by selling calls, and I'm still sitting at 42% cash. So it could have been worse. What am I seeing for next week? I'm seeing a bit of a relief thanks to this support and this support.